All right, everybody, thank you so much for joining. We're going to go ahead and get started. So here is Dr. Meyer.
Good afternoon, everybody. It is my pleasure to welcome you to Cleveland State University's 4th annual Intercollegiate Ethics Case Competition. As Bryce said, my name is Heidi Meyer. I'm the Associate Dean in the College of Business, and I'm also the Chair of the Department of Accounting. On behalf of the Department of Accounting and Beta Alpha Psi, I'm delighted to be your host today as we announce the awards for this very important educational event. Before we get to that, I'm going to turn it over to our Dean, Ken Kahn, who is the Dean of the Monteahuja College of Business, and let him welcome you as well.
Thank you, Dr. Meyer. Just wanted to give my appreciation to Beta Alpha Psi for helping to organize this ethics case competition for 2021. And I'd like to thank all our student teams for participating. Also, a special thank you to all our judges and to all the volunteers that made this a very successful competition. Hopefully next year we will be able to resume and do this in person. But again, I'd like to wish everybody well and thank you for joining us for this award ceremony.
Thank you, Ken. So this competition has been made possible through funding from the Northeast Ohio chapter of the Institute of Internal Auditors. And we want to recognize the generosity of the IIA in providing these funds in order to elevate awareness regarding professional ethics. In addition to the following that we have received, in addition to the funding that we have received to hold this event, I also want to recognize our students and faculty who organized today's event, as there was a great deal of planning and preparation requiring a significant investment of their time and effort. And as Ken said, also all of our judges who have put in a lot of their time and to help us promote ethics in our profession. I want to wish everyone good luck today. And now I'm going to introduce Bryce Bechtel, co-president of Beta Alpha Psi here at Cleveland State.
Thank you, Dr. Meyer. Well, good afternoon, everybody. We're truly honored to hold this virtual case competition, and we are pleased to welcome their students and their faculty advisors from 5 universities around Ohio. We hope the students have found the case to be informative and ethical considerations to be challenging. We loved watching your presentations to hear your insightful thoughts on the provocative case and your recommendations for approaching such potential dilemmas in the future. At this time, I'd like to take a moment and introduce today's judges and authors. One of the co-authors, Dr. Mark Holtzblatt, is an associate professor of accounting at CSU, and he teaches international accounting and financial accounting courses. He's a member of the editorial review board of Issues in Accounting Education, a journal of the American Association of Accounting. He currently serves as the chair of the steering committee on Issues in Accounting Education, as is a member of the AAA's publication committee. Professor Holtzblatt recently served 2 years as a faculty representative to Cleveland State University's Board of Trustees, as well as the CSU Foundation Board. Dr. Holtzblatt is the recipient of numerous awards for teaching, innovation, and research, including the Teaching Innovation Award, sponsored by the American Taxation Association and the Deloitte Foundation, the Outstanding Accounting Education Research Award, and the AAA's Teaching, Learning, and Curriculum section, and EY. He is also the recipient of the AAA's Innovation in Accounting Education Awarded, sponsored by EY. His latest articles have been published in Issues in Accounting Education, Management Accounting Quarterly, the Journal of Accounting Education, and Internal Auditor. Unfortunately, Dr. Holtzblatt will be unable to join us today, but he truly hopes that all the students have a wonderful event and learning experience. So now I'm going to introduce Dr. Craig Fulton, who is the other co-author of this year's case. He spent a considerable amount of time researching this case to provide the materials that were given to you. Craig Fulton is an assistant professor of accounting in the Monteahuja College of Business at Cleveland State University. He has presented at many professional meetings and has published 37 papers in some of America's top accounting journals, most recently in Issues in Accounting Education, Accounting Historians Journal, Research in Accounting Regulation, CPA Journal, and Strategic Financial Management. Fulton joined the full-time faculty at CSU in 2016, but has been serving as part-time lecturer of accounting at CSU since 1991. Dr. Fulton has won numerous awards. In 2020, he earned the Best Paper of the Year Award of Excellence, from the Academy of Historians section of the American Accounting Association. Dr. Fulton also was recognized by CSU in 2020 with the Faculty Merit Recognition Award for Research and Teaching. In 2018, Dr. Fulton was a recipient of the CPA Journal's Max Block's Award for Outstanding Article of the Year in the feature paper category. In 2006, he won the Authors Award for the Outstanding Article of the Year as the most significant contribution to the literature of the profession by the Association of Government Accountants. Prior to Cleveland State University, Dr. Fulton served as an executive vice president of administration and finance and treasurer for Tri-C. As the college's chief financial officer, Dr. Fulton was responsible for a $300 million budget and all activities regarding capital and construction, financial reporting, procurement, human resources, information technology, legal services, risk management, and plant operations. He is credited with reorganizing the college's financial reporting processes, a two-term elected mayor of the city of Lorain, Ohio, from 2000 to 2007. Dr. Fulton was responsible for administering the city's $80 million budget and overseeing all services and economic development for the city. A lifelong Northeast Ohio resident, he earned his Bachelor's of Science degree in accounting from Ohio State University, earning his MBA and Doctoral of Business Administration from Cleveland State University. Dr. Fulton is a CPA and a certified government financial manager. He resides in Lorain with his wife, Karen, and their daughters, Elena and Eleanor. Thank you, Dr. Fulton, for writing the case and judging with us today. Now I would like to invite Rob Hemley, our Vice President of Beta Alpha Psi, to continue the judge introductions.
Thank you, Bryce. Hi, everyone. I will be introducing Richard Molina and Kenneth Kahn. Richard Molina is an associate lecturer at Cleveland State University, where he teaches courses in internal auditing, tax, and financial accounting. He has been with CSU full-time since 2011. Prior to joining CSU, he worked for Marathon Oil for about 29 years, with most of his career spent in the tax organization. There, he was responsible for worldwide tax planning, employee benefits, and the IRS and state tax appeals and controversies. He was an income tax compliance manager as well. He retired as general tax counsel. Richard received his BBA in accounting from CSU, a master's from Miami of Ohio, and law degrees from University of Toledo and the University of Houston. He is a CPA and a CIA. Richard, thanks for joining us. Next, Kenneth B. Kahn, PhD, is Dean at the Montehuja College of Business. He oversees all administrative and operational activities and works to enhance the college's reputation as a beacon institute of business education, scholarship, and research. Prior to joining Cleveland State, Dean Kahn was the Senior Associate Dean of the School of Business at Virginia Commonwealth University. His career at VCU included serving as interim dean for part of 2017, as executive director of the VCU Da Vinci Center, which focused on interdisciplinary innovation and entrepreneurship initiatives across the university, and was professor of marketing. Prior to VCU, he held leadership and faculty positions at Purdue University, University of Tennessee, and Georgia Tech. Dr. Kahn's teachings and research interests include product innovation, product management, and demand forecasting of current and new products. He has published over 50 articles in journals such as the Journal of Product Innovation Management, Journal of Business Research, Journal of Forecasting, Journal of Business Forecasting, Business Horizons, and R&D Management. He has authored the books Product Planning Essentials and New Product Forecasting, an Applied Approach, and served as editor of the PDMA Handbook on New Product Development, first and third editions. In 2012, the Journal of Product Innovation Management recognized Dr. Kahn as one of the top 10 innovation management scholars in the world. His industrial experiences include serving as industrial engineer and project engineer for the Weyerhaeuser Company and a manufacturing engineer for Respironics Incorporated. He has consulted and conducted training sessions with numerous companies, including Accenture, Coca-Cola, Javi Global Solutions, the SAS Institute, and Tredegar Film Products. From 2017 to 2019, Dr. Khan served on the board of directors for the Product Development Management Association and continues to serve on the review board for the Journal of Product Innovation Management. Dr. Khan earned a PhD in marketing and a Master's of Science in Industrial Engineering from the Virginia Polytechnic Institute and State University, and a Bachelor's of Industrial Engineering from Georgia Tech. Thank you, Dean Khan, for taking the time to be a judge today. I will now invite John Ryan Finley, this year's IECC chair, to introduce a few more of our judges.
Thank you, Rob. I will be introducing Judy Richards. Judy came to Cleveland State University as a transfer student while raising her children and receiving her bachelor's degree in accounting from the College of Business Administration in 1987. While a student, she was president of Beta Alpha Psi, the honorary accounting organization, and was very active with student groups on campus. After graduation, she went to work for Coopers and Lybrand as an auditor and then came back to Cleveland State University, where she has served the university in various financial positions since 1989. For the last 18 years, she has served as the director of the Department of Audits and additionally is also a special assistant to the Vice President of Finance. Judy is responsible for preparing and presenting the annual report of university audits and an audit plan to the Board of Trustees, developing all phases of the university's audit functions, establishing goals and objectives for the Department for Professional Standards, and evaluating and maintaining an efficient audit staff, and the design and implementation of a comprehensive program for evaluating management controls over financial and operational activities. Judy is a certified public accountant in the state of Ohio and is a member of several professional groups, including the Ohio Society of CPAs, the Institute of Internal Auditors, and the National Association of College and University Auditors. In addition to Judy's many academic and professional accomplishments, she is also active in her community, where she has served on the Board of Trustees of the Cleveland Rape Crisis Center, the Junior League of Cleveland, and the Girl Scouts of America. Thank you so much for taking time to be a judge today, Judy. Jim Diat. Jim might be one of the most traveled alumni from Cleveland State University, having lived in Poland and South Africa, serving clients and teams across Central and Eastern Europe, as well as Sub-Saharan Africa. Jim is a two-time Cleveland State University College of Business alumnus and former partner of EY. Jim has worked closely with many of the largest companies in the world, a variety of U.S. government agencies, and served with EY colleagues in over 50 countries. Today, Jim resides in La Jolla, California, where he is a member of the faculty and served as the executive director of the University of California, Rady School of Management's professional accountancy program. Thank you so much for taking the time to be a judge today, Jim. Finally, I would like to invite the Beta Alpha Psi secretary, Rye Robleski, to finish the judge introductions.
Thanks, John Ryan. I'd first like to introduce Terry Bingham, CIA, CISA, CCSA, CRMA, retired in 2019 from the Federal Reserve Bank of Cleveland as a Senior Information Systems Audit Analyst. She also performed financial, operational, and contract audits, consulting engagements, and special investigations for several other organizations during her audit career. Terry received a Bachelor of Arts in Mathematics from Miami University and a Master of Business Administration from Bryant University. She is a member of the Institute of Internal Auditors Northeast Ohio chapter, where she has held numerous positions, including chapter president, membership chairman, and a member of the Board of Governors. In the past, Terry was a member of the National IIA Learning Solutions Committee and the IIA International Committee on Quality. She also was a frequent instructor for the IIA leading seminars on the performance of internal audits. Thank you, Terry, for being here today. Next, I'd like to introduce Ken Concelia. Ken Concelia has over 30 years of experience with internal audit, SOX compliance, financial reporting, fraud investigations, and compliance with the U.S. anti-bribery and corruption law, the Foreign Corrupt Practices Act. He currently is the Director of Internal Audit for Graphtech International, a supplier of graphite electrodes for the steel industry, based outside of Cleveland. Prior to his current role, he has been the Chief Audit Executive at 4 separate Fortune 500 companies, most recently with Dina Inc., a Tier 1 automotive supplier with over $9 billion in revenue, where he was Vice President, Internal Audit and SOX Compliance. While at Dina, his responsibilities covered 37 countries, which included leading investigations and training in the areas of fraud, bribery, and anti-corruption. Ken has extensive working knowledge in these areas, including effective corporate governance practices. We are so excited to have you here with us today, Ken. Again, we would like to thank all of our judges for volunteering their time to be here with us today. And with that, I'm going to turn it over to Kayla Griffin, our Beta Alpha Psi co-president, who will introduce our competing teams.
Thank you, Rye. Hi, everyone, and I'm so excited to have you guys here today. And now that you're familiar with our judges, I just want to take a moment to introduce our competing teams. Kristen Geraci, Chloe Carmack, and Luke Vonderhaar are competing from Baldwin-Wallace University. An Dang, Matthew Lee, and Hazel Luong are competing from Case Western Reserve University. Natalie Walton, Samantha Dunbar, and Harry Nguyen are also competing from Case Western Reserve University. Kyle Deacon and Savannah Loans are competing from Kent State University. And finally, Willow Fry, Nicholas Smith, and Harley Holbrook are competing from Tiffin University. We appreciate all of you taking the time to participate in this case, and without further ado, I would now like to invite one of our case authors, Dr. Craig Fulton, to announce first, second, and third place winners for this year's Intercollegiate Ethics Case Competition.
Thank you, Kayla. Gives me great pleasure to have this honor, and to draw out the suspense a little more, I want to just give another plug out to my co-author, Mark Holtzblatt, and also Jim Diat. This whole idea came, well, first it was Heidi Meyer's vision to do this kind of competition along with some BAP members at the time, but Mark and I were asked to do a case, and first time I met Jim Diat, he was sitting in Mark Holtzblatt's office, and I knew Jim was from South Africa, and I knew about this case down there, and I said, hey, what do you think of what's going on with KPMG down there? And an hour later, after some pretty good discussion, Mark and I said, you know, I think we have a case here to write about. So thank you, Jim, for being the inspiration here behind this as well. And I want to just commend all the groups. The fact that you're just taking the initiative to do this and go the extra mile, and having the courage to do these presentations, and the exposure you're getting to ethics and communication skills, and the writing and oral part of it, it's going to give you a leg up in the real world, because that's really what's going to separate you as you go down the road and become leaders. So with no further ado, I'm going to announce the winners, starting with our third place winner. And we'd like to congratulate our third place winner, Kent State University. Next, our second place winner comes from Case Western Reserve, but there's two teams from Case, and this is the one with Anna Dang, Matt Lee, and Hazel Wong as the second place winners in this year's competition. And if we could get a drum roll, our first place winner of the competition this year is Baldwin-Wallace University. Congratulations to everybody who participated this year, and we appreciate your participation. Turn it back to you, Kayla.
So we are going to take a second really quick. We tried to do our best to emulate the in-person event. So we are going to watch the first place presentation as a group, because usually we all have an opportunity to sit in on the second round of presentations. So we will listen to Baldwin-Wallace's presentation.
Hi, my name is Chloe Carmack. I'm a senior accounting major, and I will be starting my career at Ernst & Young.
Hi, my name is Kristen Geraci. I'm a senior accounting and finance major, and I will be starting my career at Union Home Mortgage.
And I'm Luke Vonderhaar. I'm a junior accounting major, and I'll be doing an internship this summer at Ernst & Young.
We will all speak on aspects of this case in our own words. Then Luke will address question number 2, Chloe will discuss question number 4, and finally I will answer question number 7. After reviewing this case, I personally feel as though there are enough twists and turns in the story of the Gupta family to produce a dramatic TV series. The wealthy Gupta family and their business empire spanning across a variety of industries is at the center of this case due to their close connection with the former president of South Africa. Their political influence and manipulation quickly became shadow governance and state capture, all to expand and grow their empire. The Gupta family used money and power to bribe government officials into making decisions that would benefit them, which all came to a head when they landed a private plane for a wedding celebration at an Air Force base. Between this and the military escort they received, they took full advantage of government resources for their private event. These events that took place in 2013 began investigations and accusations of the Gupta family and their government involvement. Then in 2017, a massive email leak from within their empire provided ample evidence of the fraudulent and corrupt ways of the Gupta family. This revelation, known as Gupta Leaks, was enough to provoke the US Treasury to issue sanctions against members of the Gupta family.
How do 30 dead cows found in a remote area of the Free State in a wedding scandal relate to a Big Four firm? Well, Gupta Leaks emails revealed that KPMG South Africa ignored 30 million rand of funding that was supposed to go to the Free State dairy farm. Through the international money laundering scheme mentioned before, this money actually ended up funding the Gupta wedding. KPMG South Africa also audited the Gupta company Linkway Trading. Linkway paid for the Gupta wedding, and KPMG allowed the company to record the wedding as a business expense. Therefore, Linkway paid less income tax. KPMG's mistakes aren't finished there. In addition to poor audit work, they had independence issues. The lead partner on the Linkway audit actually attended the Gupta wedding along with 3 fellow partners. A high-level partner also ignored a junior auditor who questioned the treatment of wedding costs as a business expense. Maybe this was an information and communication problem within the firm, but coupled with attendance at the wedding, it feels as if those partners were closer to the Guptas than they would care to admit. KPMG's failures resulted in the 6 IRBA charges listed here.
The IRBA launched a probe into KPMG's 2014 audit of Linkway Trading without a formal complaint. They focused on Jacques Wessels, the lead partner during the audit in question. SAICA launched a separate investigation into KPMG South Africa related to the same audit. During the investigation, the IRBA found insurmountable evidence of Wessels infringing on the Auditing Profession Act, which Luke previously mentioned. During the disciplinary hearing with the IRBA, Wessels pled guilty and was found guilty for all 6 charges or failures that Luke listed before. In result, Wessels was stripped of his registered auditor license and was ordered to pay 300,000 Rand to the IRBA, and his name, firm, and charges were published. The SAICA followed suit and had their disciplinary hearing related to Wessels. They were convinced that Wessels understood that his actions were severe and inappropriate, since he mentioned during his testimony that he did not agree with the IRBA's findings and conclusions. It took the IRBA 22 months and me about 5 minutes to come up to the same conclusion. The SAICA further decided to remove Wessels as a member for at least 5 years. Now that we have described the case in our own words, Luke is now going to discuss the effect of this case on KPMG and their actions to improve their reputation.
Thanks, Chloe. Warren Buffett said it takes 20 years to build a reputation and 5 minutes to ruin it. If you think about that, you'll do things differently. For accounting firms, reputation is everything. We could view an audit as a commodity. Companies need to have that stamp of approval on their financial statements. When selecting an auditor, companies must consider the audit fees and the consequences of potentially unreliable financial reporting. To separate themselves from their competitors, public accounting firms must build a strong reputation. Firms with a track record of ethics issues and poor audit quality will be forced to underbid and charge a lower fee. In this way, reputation is a differentiating point. We can also view an audit as a service. Accounting firms have a responsibility to society to make sure reliable, accurate information is provided to the public. Just like people trust pilots and doctors to do their jobs ethically and responsibly, society must be able to trust audit firms to act with integrity. Maintaining public trust and a good reputation is critical to the success of the entire public accounting industry. We know KPMG South Africa's reputation took a major hit. They lost clients such as Sasfin Holdings and Barclays Africa. Their work on other audit engagements was called into question by the Bank of England, and the scandal even damaged the South African national economy. The country dropped 14 spots in the Global Competitiveness Report and went from first to 30th in the audit and reporting standards ranking. This is a great example of how many parties can ultimately suffer from the ethical failures of a few. Despite the damage, I believe KPMG could have saved face internationally if this were the only ethical issue within the firm in the last decade. However, because they followed up this blunder with the PCAOB scandal and then followed that up by cheating on internal ethics tests, it feels like there is a widespread culture issue at the firm. When you have partners involved in money laundering schemes, top employees violating the integrity of PCAOB inspections, and employees at every level subverting ethics training, you can no longer label the issue isolated. In fact, I believe the reputation of the entire Big Four has been damaged. We are seeing more and more discussions about mandatory audit firm rotation in the UK and the EU. Basically, the government is saying we no longer trust these audit firms to maintain independence over long periods of time. The scandals surrounding KPMG show that the reputation of big audit firms as ethical, trustworthy institutions has been severely damaged. If firms can't be trusted to be the buffer between corporations and the investing public, then we could move closer and closer to a world where regulatory organizations such as the PCAOB become the actual auditors. KPMG South Africa released an integrated report in March of 2019 that contains a lot of statements about rebuilding trust and their renewed commitment to ethics and professionalism. Now, words alone wouldn't be a sufficient response, but the report also describes a number of actions the firm is taking to back up what they say. Of note is the Speak Up campaign to encourage the reporting of fraud and corruption. They're also making substantial donations to education and anti-corruption organizations, as well as linking the compensation of partners to the successful upholding of firm values. I believe the actions described in the integrated report are a great start, but to echo Warren Buffett, it might take 20 years of quality work and ethical performance to rebuild KPMG's reputation.
Independence in fact versus independence in appearance. Independence in fact is where auditors do not have a stake in the client, and independence in appearance, where auditors are not in any relations that third parties would find questionable. This is important because users of these financial statements must trust in the auditors and the financial statements. A lack of independence could create skepticism and damage the relationship. Ultimately, the client pays the auditor for the service, so independence creates this barrier to prevent the appearance of companies from buying clean audit opinions. In this particular case, the major audit independence issue was that Wessels attended the Gupta wedding. It already is bad PR to attend an event that was so infamous in South African media, but this audit partner attended a personal event related to his client. This signals that the professional barriers were at best lowered and at worst non-existent. A third party would be alarmed to see the relations between the auditor and client during the wedding. Internal partner rotation significantly improves independence. Those questionable relationships usually form between the partner and top management. Those relationships tend to be what furthers independence issues and then can lead to negligence and other failures related to this case. Wessels was the lead partner and instigated several unethical acts on behalf of the Gupta family. External auditor would also add incremental amounts of independence by placing a barrier to prevent anyone on the team from developing questionable long-term relationships with the client, but that slight improvement comes at a steep cost. So no, audit firm rotation should not be implemented in the United States. It is not worth it. Rotating auditors every 5 or 10 years would be quite expensive for firms. It would also become time-consuming and put enormous pressure on the entire team, leaving room for error. During my busy season internship with EY, I was able to experience what it's like to be a staff auditor. It was already challenging, and I could not imagine how it would be possible without that foundation from prior year work papers to keep us afloat. A study was done in Indonesia to study the effects of mandatory auditor rotation and audit quality. They found that the mandatory auditor rotation had no effect on audit quality, and when it was repealed, they actually observed an increase in audit quality. When auditors have time to understand their client better and have a foundation of prior year work papers, they are able to dig deeper and maintain a higher level of audit quality. Turnover for firms with revenues in excess of 75 million is about 20%. With significant turnover that comes with the industry, audit firms can look entirely different in a matter of a few years. Usually no one is preparing or reviewing the same work papers year after year, so there's always a fresh look. And ultimately, there is no regulation or barrier that can be implemented to prevent 100% of unethical behavior. In 2011, the PCAOB was exploring the idea of mandatory auditor rotation. Nearly 700 comment letters were sent to the PCAOB on this matter, from Big Four firms to executives to organizations like the AICPA and the IIA. We found a reasonable alternative from the IIA comment letter, which is to mandate an auditor change in circumstances of restatements or other situations that indicate audit failure. It is in everyone's best interest to have safeguards, but not ones that heavily outweigh the benefits. Partner rotation is certainly a safeguard that also isn't too taxing on audit quality and firm as a whole. As we look to the case, Wessels was the lead partner and committed these harmful acts, not as team as a whole. We must pay attention to leadership within firms and the tone at the top if we want to improve the unethical behavior that seems to plague the biggest firms.
When considering whether audit firms in the US are doing a good job in self-regulating and if more regulation is necessary, we feel as though it is important to first distinguish between regulation and self-regulation. Since Sarbanes-Oxley, independent inspections of audit firms with SEC clients have been conducted by the external PCAOB. In order to prepare for these inspections, firms usually have some sort of internal readiness check to ensure that they are complying with PCAOB guidelines. To do this, firms tend to have internal groups that do these pre-PCAOB quality reviews. The bottom line is that audit firms, both internal and external regulation, is primarily focused on one thing: audit quality. We feel as though firms are so focused on quality standards and rules enforced by the PCAOB that they're lacking self-regulation and internal controls in other areas. We chose to think about audit firm self-regulation by examining the COSO cube, which demonstrates an effective internal control system. These are the standards used to audit the internal controls of all publicly traded companies. When considering audit firms themselves, self-regulation only covers one aspect of the cube: control activities. They cover this given their priority of compliance with PCAOB audit quality standards. The other aspects of the cube, however, are areas where issues in audit firms are taking place due to the lack of self-regulation and internal controls within firms. The tone at the top set by upper firm management is important to consider when regulating a control environment. Regarding risk assessment, firms should strive to avoid threats to achieving their ideal reputation and goals, such as attending the wedding of a highly publicized and controversial client. Releasing internal and external reporting on firm updates would improve information and communication. And finally, firms seem to be lacking monitoring activities that cover all aspects of the cube, which leads to our recommendation. We recommend that audit firms implement an internal audit function. This could mean having a unique set of internal control policies and procedures that go beyond regulation of the PCAOB. This way, firms would be constantly checking themselves and improving all areas of their business, not just the emphasis on audit quality that PCAOB regulations enforce. We thought of areas that firm could perform internal audits, such as their hiring process, diversity and inclusion measures, and reputation risks. We have researched to see if firms have any sort of internal audit departments, and all we found is that they offer outward-facing internal audit consulting. There's no evidence of internal auditing groups that focus on areas outside of audit quality. And this is our recommendation that we feel could help to eliminate some of the ethical problems that were encountered throughout the KPMG case.
That was a great presentation. Then congratulations to Baldwin Wallace, but congratulations to all of our teams. We really appreciate and recognize your efforts and all of the hard work that you put into your presentations. And we thought that you all did a wonderful job. I'm sure that the judges will have some comments later that they can share with you, but I know that you all did a wonderful job. So as we conclude this competition, there are so many thank yous that I want to provide. First of all, I want to thank the Institute of Internal Auditors and their financial support for sponsoring the competition. It is very imperative for us as a university to partner with organizations like the IIA to be able for us to host this wonderful event now for the 4th consecutive year. Secondly, Thank you to all of the students who have taken time out of their day to participate in this event. I know it's a Saturday. I know that this is your day off, and I really do appreciate you coming and sharing your day with us. We know that also this is a very busy time of the year for all of our college students as they prepare for exams and for graduation. We really appreciate your collegiality, your eagerness to learn, and your willingness to partake in the academic and networking event. We hope that you have found it rewarding. We hope you found that as a good learning experience, and that this has piqued your interest and raised your awareness about ethical situations in our profession. We hope you've enjoyed your virtual time here at Cleveland State, as we have loved being your host. Along with that, we also want to thank the faculty advisors of each of these teams for giving your time to help your students and assist them in this endeavor. Another big thank you goes to our judges who have volunteered their time to be here today and provide their insight and experience to review the students' presentations. And lastly, but by no means least, I want to thank our students here at Cleveland State from the chapter of Beta Alpha Psi for their hard work to organize and run this event today. So thank you for being such gracious hosts to our visitors and for putting on a great event. I'm extremely proud of each and every one of you.